going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital FX YouTube channel. Today I'm back with a very simple strategy that you can use on V751S and V51S. Watch to the end so that you understand all the rules pertaining to this strategy. And what I'm going to be using here is I'm going to be looking at daily rates of liquidity, and I'm going to be using the breaker for my entries. So that's it, guys. Let's go right into the strategy. So what we are going to be doing here is looking at the V751S and 50S charts on the M5 time frame. So I see a lot of you guys asking me, what is the best time frame? What is the best time frame to trade? And my answer to that is you have to look at the strategy and you have to apply it to the time frame that best suits it. So for this particular strategy, we are going to be using the M5 5-minute time frame, and we are going to be sticking to that. So what you need to do is we have a couple of things that we need to understand or that we need to get before we go. So let's say you want to trade. So first of all, you have to identify the previous day's high and lows. So guys, if you have been trading for a long time, you know how important the previous day's highs and lows are in this industry. So what you are going to be doing here is very simple. We are just going to mark our high and lows for the particular day. So if you are looking at this particular day, you can see that this was the high for this particular day, bordered by these two period separators. So and the low was this one. So what we are going to be waiting for is simple. You are just going to be waiting for price to strike through the high or the low, depending on what gets taken first, right? So from what you are seeing here, price spiked through a high, as you can clearly see. So what you are doing is you are gonna be marking the order blocks as price goes, and you'll be waiting for the break, which makes it a breaker. So if you start marking these order blocks as price is going to the high, as you can clearly see in this example. So this is how you are marking your order blocks and following price as price goes, right? So in this particular moment where price then breaks the breaker, and this becomes your entry, your stop loss is going to go above this high, and you're going to go for the next low as your take profit. So you do have hit your take profit at this particular point. What you're just going to do is you're going to identify a breaker and a retest to that particular breaker. This is our entry method. So what you're going to do for next is we mark the high and we mark the low for that particular day. And what are we going to wait for? We are waiting for price to break any one of that. So when it breaks the low here, it leaves a breaker, or it forms a breaker right here. So this is our breaker, this is the retest. You go and you get your trade. So that is the strategy in a nutshell. So what I'm going to do now is going to explain in detail how you need to be entering this trade and how you need to be identifying these highs and lows as explained here. So as you can clearly see, this is another high, and price came here and retested this particular high. And what did price do? Price left this breaker here, break the breaker, retest and go. And as you can clearly see here, our stop loss was above this high, So if you had entered your trade at this particular point, you are still in the trade here, and your TP is this low right here, and you're still in it, and you will be holding your trade like that. So this is what you are doing, and we will be going deep into explaining what you need to be seeing on everything that we are doing on this particular chart. So let's just go and explain. Right, so if you are looking at a chart that looks like this, right, this is a chart that you are looking at, right? At the moment, what we want to see is this. Let's say, for example, we have a high, this one, and a low, this one. Price is trading inside this range. So what we want to see is a break here or a breakdown here. Whatever break first, we are going to go against that. So in other words, what we mean is when this high breaks, it means we have taken out liquidity resting at the previous day high. And if we are to break the low, it means we have taken out liquidity resting below the previous day's low, and we are expecting a Judas swing where price just turns back, creates a breaker, and continues to go up. So from what you are seeing here, what you need to see is, let's say price is going to break the high. You are going to see price moving like this. You are going to see price moving like this, then breaks. So when it breaks, we are waiting for an opposite candle that were being formed as price was going up. So as you see, or as you analyze this type of movement, you can clearly see that we were in a bullish trend, right? So what you are going to be doing is analyze or mark out bullish order blocks and wait for their break, and we wait then for the retest. So when an order block breaks, it becomes a breaker block. So what you're going to be waiting for is a retest of that breaker and go, and you're going to be targeting these lows, right, as price goes. So this is the same for a buy opportunity or a buy setup, where we are expecting price to break a low. Price will be moving like this. So as you look at price will be in a bearish order flow scenario. So what you are going to be waiting for is a break of a bearish order block in this area. So price will then break the order block, the bearish order block, and retest that particular order block, which makes this a breaker block. And you're going to be getting your trades at this breaker, and your stop loss is going below here, and you are going to be targeting these highs as price goes. So we're just looking at a change of a change of trend, or a change of the cycle, so that price can go from peak to peak, right? This is what you are doing. So if we go back to the charts, I'll clearly show you how this is happening in the market. So now let's go and look at the volatility 51S. So this is volatility 51S, and the horizontal line that you are seeing here is the yesterday's high, and price spiked through the high, as you can clearly see here. So the thing that we want to know, or what we want to see here, is price then breaking an order block or a breaker, as in this case. If you clearly see here, this was the order block that was pushing price up. It takes out this high right here, which is top one, then breaks the order block and become. So when the order block breaks, it becomes a breaker block, right? So we are just referring to this as a breaker, right? So when price comes back and retests this breaker, your stop loss is up here, right? Your stop loss is up here, and you are targeting what? You are targeting this low right here. So you can take partial profits at this particular high, depending on this of basing that on this move that price would have shown you. So this is V51S. You would have made a lot of money on this move alone. If it were up to me, I would take all my profits here. But then there's this retracement that doesn't take us out. But if you had moved your stop loss to break even, you'd have been taken out here. So this is the first example that you need to see when you are looking at this particular setup or this particular strategy. So we come here again and look at this high. So this is the high from yesterday. So price just breaks through that high, then comes back and breaks a breaker in this area. So this is your breaker. Price breaks and retests that breaker. Your stop loss is up here, and the targets are these lows that you are seeing here. These are your targets as price expands lower and lower and lower. So this is the day today. So today the date is the 12th of September. So what we are going to do is mark the low. So this is the low. Price breaks the low. What are we waiting for? Very simple. We are waiting for price to break an order block or a breaker in this case. So price breaks, retests, and this is your trade. This is how it is going. So when price gets to these highs and these gaps here, you would have taken your profit. So this is a very simple strategy that you can use in your trading, and this can make you a lot of money. So guys, this is what I have for you. I wonder why people don't use this strategy. This is a very good strategy, and you can apply it in your trading and make money. I'll see you in the next video, guys. I hope this was helpful. My name is Shocks. I've shown you what you see. Trade what you see. not what you believe.
Introducing Deriv, one-stop shop to trade Forex, stocks and indices, cryptocurrencies, commodities, and derived indices that include but not limited to Volatility 75, V100, boom and crash indices, and many more. And to top it off, you can trade 24/7. Weekends are for trading. Deriv is one of the biggest online brokers in the world that offers the following: synthetics, CFDs, multipliers, options. To millions of consumers who have registered all across the world, we provide CFDs and other derivatives on currency, stocks and indices, cryptocurrencies, commodities, and derived. Simple, flexible, reliable. Pick from 8 effective platforms that were each created with your needs in mind. To benefit and be part of this, go to ShocksCapital.com and click Start Trading, or click the links in the description and pinned comments.